2. In wealth management, the core satellite investment strategy aims to a. Avoid all risk through diversification. B. Use derivatives as a primary tool. C. Combine passive core investments with active satellite strategies. D. Focus only on equity mutual funds. 2. In wealth management, the core satellite investment strategy aims to a. Avoid all risk through diversification. B. Use derivatives as a primary tool. C. Combine passive core investments with active satellite strategies. D. Focus only on equity mutual funds. 3. The primary goal of strategic asset allocation is a. Market timing. B. Maximizing tax deductions. C. Long-term portfolio balance aligned with client risk profile. D. Daily profit maximization. 4. The Sharpe ratio is a measure of a. Portfolio liquidity. B. Risk-adjusted return. C. Absolute performance. D. Dividend yield. 5. If a client has a high-risk tolerance and a long-term investment horizon, the portfolio should generally emphasize a. Money market funds. B. Government bonds. C. Equities and growth stocks. D. Certificates of deposit. 6. Modern portfolio theory (MPT) primarily assumes a. Investors seek to minimize returns. B. Markets are inefficient. C. Investors are risk-averse and seek to optimize risk-return. D. All investors prefer illiquid assets. 7. A financial plan typically begins with a. Estate planning documents. B. Cash flow and net worth analysis. C. Asset liquidation. D. Retirement distributions. 8. Which of the following is a key component of retirement planning? A. Projected inflation rates. B. Business inventory turnover. C. Foreign exchange hedging. D. VAT optimization. 9. The time value of money concept implies a. Future dollars are worth more than today's. B. Present value and future value are always equal. C. Money today is worth more due to its earning potential. D. It only applies to corporate finance. 10. The purpose of risk management and financial planning is to a. Eliminate all possible risks. B. Transfer all risk to insurance companies. C. Identify, measure, and mitigate risks appropriately. D. Avoid investing in any financial products. 11. Which insurance product is most commonly used to protect against premature death? A. Health insurance. B. Disability insurance. C. Term life insurance. D. Property insurance. 12. An annuity provides which of the following benefits? A. Immediate tax deductions. B. Regular income payments, often during retirement. C. Capital gains tax exemption. D. Unlimited liquidity. 13. Which of the following is not a key goal of estate planning? A. Avoiding probate. B. Maximizing estate tax liability. C. Ensuring assets are transferred according to client wishes. D. Providing for dependents. 14. A revocable living trust, A. Cannot be altered after creation. B. Becomes irrevocable upon grantor's death. C. Avoids taxes entirely. D. Requires court approval. 15. The step-up in basis rule affects a. Corporate bond income. B. Real estate depreciation. C. Inherited asset valuations. D. Business liabilities. 16. Fiduciary duty implies A. Recommending only high-risk investments. B. Acting in the best interest of the client above personal gain. C. Prioritizing firm profits. D. Avoiding all disclosures. 17. The AAFM Code of Ethics requires professionals to A. Minimize client contact. B. Engage in continuous personal investing. C. Maintain confidentiality and integrity. D. Focus only on high-net-worth clients. 18. Conflicts of interest should be A. Ignored if the client is unaware. B. Disclosed fully and promptly. C. Hidden within advisory fees. D. Managed without client involvement. 19. Hedge funds typically, A. Are publicly traded. B. Aim to outperform in both rising and falling markets. C. Only invest in municipal bonds. D. Avoid leverage completely. 20. Private equity investment differs from public equity primarily in that it A. Is subject to SEC registration. B. Offers instant liquidity. C. Involves investing in unlisted companies. D. Always includes fixed income instruments. 21. A sovereign wealth fund is best described as a personal trust fund. B. A central bank's monetary reserve. C. A government-owned investment fund. D. A charitable endowment. 22. Loss aversion describes a behavior where A. Investors prefer gains over losses by equal measure. B. Losses hurt more than equivalent gains feel good. C. Investors act completely rationally. D. Taxes are ignored in investment planning. 23. Anchoring bias can lead a client to A. Make better decisions. B. Focus excessively on irrelevant starting information. C. Rebalance portfolios systematically. D. Accept all advisor recommendations. 24. One effective way to improve client communication is to A. Use excessive technical jargon. B. Avoid discussing fees. C. Actively listen and tailor advice to client needs. D. Provide identical plans to all clients. 25. Net present value (NPV) of a project is positive if A. Internal rate of return is below discount rate. B. Present value of inflows exceeds outflows. C. Project cost exceeds all revenues. D. Risk-free rate is 0. American Academy of Financial Management. The Center for the American Academy of Financial Management (AAFM) is a globally recognized institution that provides professional certification and education in finance, wealth management, and related disciplines. The AAFM offers designations such as the Chartered Wealth Manager (CWM), Master Financial Planner (MFP), and Registered Financial Analyst (RFA), aimed at enhancing the expertise of financial professionals. Its certification programs emphasize ethical conduct, practical skills, and global standards in financial planning, risk management, and investment advisory. The AAFM collaborates with accredited universities and institutions worldwide, ensuring rigorous academic standards and continuing professional development. Certification from the AAFM is a mark of distinction and credibility in the financial services industry. Here are the top 5 beneficial uses of the sample exam. 1. Professional credibility. Passing the AAFM exam grants globally recognized credentials e.g., CWM, MFP, enhancing a professional's credibility and trustworthiness in the financial services industry. 2. Career advancement. AAFM certification opens doors to higher-level positions in wealth management, investment advisory, and financial planning, often leading to increased earning potential. 3. Specialized knowledge. The exam ensures mastery of advanced financial concepts, including asset management, risk mitigation, estate planning, and ethics, fostering strategic decision-making skills. 4. Global mobility. With its international recognition, AAFM certification allows professionals to work across borders in multinational firms and global markets. 5. Networking opportunities. AAFM membership connects individuals to a vast network of finance professionals, industry events, and continuing education programs for long-term growth.